We got $85 billion scheduled for March 1st. That's going to be split between defense and non-defense discretionary spending. Then a potential another $12 billion that's just for defense on March 31st. Let me bring that home for you. Where I live in Connecticut, that will translate to over $9 billion in defense cuts in the 2nd and 3rd congressional district. And you can see the charts here, looking at the Budget Control Act for 2011 and the Taxpayer Relief Act for 2013. We've got real fiscal austerity in the pipeline coming. It could end up evolving over the next decade.
And evolving over the next decade in terms of GDP, what's the hit look like?
Well, this year we'd have a 2% drag on GDP if sequestration were fully implemented. And of course, that would effectively, for the second quarter, mean probably close to zero growth. Essentially, we'd really have a very weak economy.
Joe, we saw large increases in personal disposable income and savings in December. Is that going to continue?
No, it's not. And what you saw, and if you take a look at this line, you can see at the very end of the chart that both the savings and the personal disposable income go parabolic. That's individuals pulling their compensation forward to avoid the tax hikes, both payroll and personal income taxes, that took place at the beginning of 2013. Investors should brace themselves. They could actually see a 2% decline in personal income month over month for January.
Joe, we were just talking about economic growth. GDP contracted in the fourth quarter. What can we expect for the first quarter of this year? What are the numbers telling you?
Well, the numbers right now, the Bloomberg consensus forecast is telling us around 1.8%, but right now the risk is to the downside. Now, next week we're going to get the revision for the fourth quarter. Remember where we had contraction? Yeah. Okay, this is a little bit of good news because of better trade data and a little better fixed business investment.
But does that mean are recession flares up in the air?
Because of the fiscal drag, there is some concern that the economy could slip into recession this year. I think it's still a low probability play, but when you look at what's happening here, is the fourth quarter is going to shape up to around 0.5% to 0.8% rate of growth. Then we're probably going to go around 1.5 to 1.8 in the first quarter. And because of because of sequestration, we could be dead flat in the second quarter. That's a very difficult three-quarter sequence for the United States economy to go through, when really it still needs help to grow.
Joe, you surprised by that number, the consensus number, 0.6%?
No, we saw a really sharp narrowing of the trade deficit, which actually will take the estimate, which was contraction in the fourth quarter, moving it to 0.6%. And this is indicative of our economy.
Sure.
This is about the best news we got going right now.
Well, we got a lot of economic reports this week, a lot of them to deal with housing. Do we see anything on that front that's going to suggest that housing might finally be in a position to propel this economy going forward in 2013?
Well, sure. Housing starts are increasing at a sustainable pace because we're seeing job growth and increased household formation. There's just simple demand out there for it.
Yeah.
Now, we want to put this in perspective, Mark. Prior to the recession or the crash, housing was responsible for about 6% of overall GDP. Right now, it's about 2 to 2.5%. It helps, but it's not going to be what it once was.
Is there any chance that it might get up back near that 6% level?
Not for the next couple generations.
Wow. Durable goods. We're seeing a rebound in durable goods. Is that going to continue?
Yeah, that should continue. Now, this is part and parcel the rebound from the alleviation of, or the relief of getting over the fiscal cliff. Because sequestration's still there. There's some risk to the rebound, specifically having to do with defense. You know, I'd mentioned Connecticut earlier. We're overweight with Sikorsky and United Technologies in terms of defense contractors. So if that sequestration does happen, that expected rebound that everybody's penciled in for the second half of the year, which supports the 2.5% consensus forecast, if sequestration happens, they're going to pull that back.
In 2009, that plunge really tells a story, doesn't it?
That does. That was when we came perilously close to that financial system collapsing, and that's the big panic you see. Then you get the real big rebound off of the stimulus. And look, the trend has been, well, we've been on a slow downward descent back towards slow growth, which is what our economy is. We have a slow growth economy.
Joe, it's interesting because you and I have talked after you do these segments on Friday. You get a lot of feedback on this. What are folks telling you?
Okay, one is they love the visualization of the data. Two, they like the fact that they've got a good forward look, and this is grounded in solid fundamental data.
Absolutely.
This isn't strategist BS. This is a professional economist showing you what you should look at, how you should look at, and it's just giving you a hint of maybe what your forward look should be.